Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are about 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, and Taylor Riggs together here, counting you down to that closing bell, here to help take us beyond the bell. Our global simulcast team, a team of one today. Tim Stenovec, Carol Massar, already off for that long weekend. Crack one open for her. All right, Tim, we got to talk about this market here because we are camped out right now at record highs. I think a lot of people who came into this week on Monday, they would have been surprised if you had said this is where we would end on Friday.
You are absolutely reading my mind, because that sell-off, the narrative all around the sell-off that we saw on Monday was, hey, there are concerns about the Delta variant spreading around the U.S., spreading around the world. That could spur concerns about more virus restrictions. It could prevent people from spending money. It could hit companies. And here we are on Friday, and we're looking at another record day. People came in and they bought the dip.
They bought the dip. They bought broadly. I mean, the Nasdaq's currently up more than 1%, and people like big tech. But basically, most industries pushing higher. We haven't got that much volume a little bit lower on the Nasdaq and the like, but still not off significantly, Taylor.
Not off significantly. You're still getting sort of this classic risk on sentiment. It was confirmed as we were just talking with Richard Bernstein of Richard Bernstein Advisors, Romaine, about some of the high yield sentiment that you continue to see. And right now, if you're not taking credit risk, you're certainly taking some duration risk in those bonds.
We're flashing the Russell 2000 on the screen, up 0.4% on the day. But I mean, when we talk about the risk and the reflation trade here, I mean, you're still talking about a Russell that's nowhere near its record high that they could set back in March. You're still about 6% below that. So what does it say that you've seen the S&P and the Nasdaq hit these new record highs, but the Russell continues to lag?
Yeah, that's certainly the big question. Hey, Romaine, I'm looking to next week because we're expecting serious earnings. It's like the Super Bowl next week, right?
Yeah, it is
Apple,
a Super Bowl.
Alphabet,
of course,
Microsoft.
we're going to get absolutely. We're going to get about a third of the S&P 500 reporting next week. We're going to chat about that in just a second here, Tim. But let's get you the closing bell here in New York on this Friday. 43.57 on the S&P 500. That's up about 1% as we wait for these numbers to settle. The Nasdaq Composite 152.39, up 1%. Both of those are record highs. The Dow Jones Industrial Average right now at 35,000. That's up 238 points, about 0.7%. I believe that is a record high as well. I think somebody can ratify. No, maybe. Well, we'll double check that. And then, of course, the Russell 2000. This is what we really got to talk about here. It's finishing the day higher. It's finishing the week higher, but it still is the laggard here over the past few months. And if you just take a piece of that chart from the far right of your screen here, you get a sense here of maybe some of the trepidation about that cyclical rotation.
I can confirm record high for all the main indices. The
I'm
Dow,
glad
the
someone
S&P
spoke up.
500, the Nasdaq, the Russell 2000, though, as you say, the key laggard. So there is a desire to be buying into these riskier parts of the market, but not the cyclicals, Taylor.
Certainly not. Sorry about that pause, Caroline. Let's come and take a look at where we are in terms of some of those cyclicals on the sector level. For our radio audience, of course, as we do every day, we're looking at some of the gainers and some of the losers. The good news is there's a lot of green within the losers. I feel like I've been saying that a lot lately. But, Tim, you certainly see the rotation out of some of that cyclical trade. It's autos, banks, energy, and semiconductors that are the big laggards on the day. But you're only off up to about 0.4%. We migrate higher, and I have to say it. It is media and entertainment. And Tim, dare I say it, this really pushes us forward to next week as well. You're up 3.3% on that sector.
Yeah, as Romaine mentioned, a third of S&P 500 companies reporting next week. No shortage of where to find gainers and decliners today. Let's start with Snap, the company finishing the day higher by more than 23%. Shares soaring to a record after the company's second quarter results and guidance came in well above expectations. Facebook also moving in sympathy here, guys. If you're in online advertising right now, Mandeep Singh telling us earlier on Quick Take you are in a good position. Investors certainly thought that. Also got an upgrade, Caroline, from Credit Suisse, went to $480 from $400. That a street high. Can we for a second, though, pour one out for Sam Adams?
No, you can't. That seltzer you can't pour out. Not doing well.
Oh, yeah. Boston Beer Company, the parent company of Sam Adams, finishing the day down more than 26%. That is a record single-day decline for the company. Hard seltzer.
I blame Gen Z.
You know what? I have to tell you, I was never a fan of hard seltzer. And now the company coming out, remember, the company makes truly hard seltzer. The company coming out and saying, hey, this market is getting crowded, not enough new customers drinking hard seltzer.
Go back to the Angry Orchards, that's what I say.
What did you say?
Go back to the Angry Orchards, that's cider.
Cider.
Go back to
Fancy
cider.
Though, not
Okay.
that normal apple cider.
I'll do it.
Rosé.
Intel also finishing the day down post earnings. We've been talking about it all day. Caroline, down more than 5.2%.
Yeah, some big losers there. What also we're seeing in terms of losing across asset, I'm going to the foreign currency market. And we talked about this risk-on sentiment. It meant that some of your havens of choice in the FX market were on the downside, looking at the Japanese yen off by 0.4%, your key laggard on the day. British pound also giving away a little bit at the moment, but not much of a narrative when it came to the currencies market. Dollar, though, did manage to eke out a slight gain today after having been on the downside yesterday. What also eked out a gain on the week was actually oil, managing to suppress some of those Delta variant concerns and actually looking a little bit more about the fuel demand, the driving that's going on in Europe, in the US, and across to Asia. So we actually saw Brent crude up 0.4%. We're back at about a $74 handle. Iron ore, some of the money coming out of the big metal commodities at the moment, maybe China pushing back against some of that. But notable, we've seen such gyrations this week and pushing ever higher for the likes of the coffee, some of the soft commodities. We had that perfect storm that we've all been talking about in terms of the weather, just extraordinary, from frost to fierce heat, all of it wreaking havoc across the commodities spectrum. So keep a keen eye on some of the commodities for next week. And the commodity producers' earnings coming thick and fast from key miners, key agricultural companies. We want to hear what they say on inflation. And I look at a picture also mixed when it comes to sovereign bonds, Taylor, around the world.
100%, Caroline. We're taking a look at where we are, and unfortunately, it looks a little unch on the day. You're trying to get a lift up in yields, but it really is that reflationary trade that's been the big underperformer. We have to talk about the 10-year, and Tim, I've been mentioning this on TV, and I'll repeat it to you on radio. You start off the week, if we can change the board from the intraday to that wonderful weekly that I know our producers have, it's like nothing changed. The 10-year yield last Friday, a 129. Today, a 128.
Wow.
But Monday, you had a big drip down to a 112, and there were some big thoughts that we might hit lower, like 1%. So certainly a lot of moves in the week, despite, well, it doesn't really look like much. But Tim, we digress because, of course, we push forward to next week, and it is really all about big tech, and it certainly was a high standard set by Snap and Twitter, as we know yesterday.
Yeah, and look, Facebook investors are certainly optimistic about what the company is set to report next week. Apple, Alphabet, Microsoft, AMD, PayPal, Qualcomm, Amazon, and more. This is like my Super Bowl. It happens once every 3 months. And this is like the best week. I never want to miss it.
The excitement. He doesn't want to go to space. He wants to come back down and be here for what all the earnings are saying. But, of course, it's also notable that so many companies are beating analyst forecasts at the moment. About 87% of the S&P 500 so far have reported results that are beating Wall Street estimates. Romaine, I know that you have some cynicism about that because, look, does it make sense anymore to be trusting what really analysts are saying?
Well, I'm glad you brought that up because, I mean, the margin issues are real here. I think Kimberly-Clark was sort of emblematic of that. The earnings at the top line actually weren't bad, but then you look at that margin compression, 800 basis points, and that's not the only company where we saw that from. And, I mean, you rattled off, Tim, a lot of those big cap tech names. Those are the resilient names, but you have to wonder what we're going to hear out of McDonald's, what we're going to hear out of Starbucks, what we're going to hear out of Exxon and Raytheon and Sanofi and all these names, your Procter & Gamble, companies that really have real input costs that they have to deal with that are maybe a little bit harder to pass on to the consumer in a way that maybe an Apple or an Amazon or whoever can do. You know what I'm saying, Taylor?
I am, and it's interesting. Anurag Rana putting out his latest research note on Microsoft pushing forward to next week, highlighting, Tim, some of those margin pressures, and that's a big word when you're talking about Microsoft and the cloud margin, but hinting that you can get a lot of that top-line growth despite some of the stickiness in the middle. And, Tim, I'm going to leave you with this. It was Anand Srinivasan. He killed it this morning. Apple has this goal of being cash neutral. How are you cash neutral when you have $100 billion in cash on the balance sheet? And guess what? Your free cash flow, $90 billion a year. Where, basically, Anand said you aren't cash neutral.
Yeah, it's a really good point. I want to look ahead to next week because beyond earnings, we're also going to hear from Fed Chair Jay Powell on Wednesday for check-in on the press conference. Inflation will be top of mind, I know, for journalists and investors who are watching that closely. I just spoke to Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Over and over again, he said this is going to normalize. Inflation will go to 2%. Companies will no longer have trouble attracting and retaining talent. We will see that imbalance that we see right now. We will see that start to normalize.
Yeah, there's a lot of economic data, though, that's going to be swirling around this. I mean, you obviously want to hear whatever taper talk he's willing to offer up. But keep in mind, we do get those GDP numbers. Not going to be a surprise, that 8% rate that most people are looking for, but really about the sustainability of that. And so you can nibble at some of the durable goods orders data that we're going to get next week, the new home sales, and a lot of the other stuff. Taylor, are you awake? Are you
Yes,
listening to
I'm
me?
awake. I'm here.
Okay. Do I need to break out the Crocs again?
No, I'm nodding. I'm nodding.
She's
and
been
my eyes are open.
on
Are
air
you drinking
since
hard
5
seltzer?
She's been on
this
air
morning.
since like 3 o'clock this morning.
Since 5 this morning, we've got our own little labor shortage
3:33.
sometimes, but it is notable that we are seeing toward so many mixed pictures from so many of our guests. For every one guest who says inflation is transitory, another one like Evercore ISI chairman will come on and say actually inflation is going to be at 3% for the longer term. So it's going to be a real debate, and we have to see what the commodity spectrum continues to tell us on that front.
We're going to have to, of course, wait and see. In the meantime, all of you have a wonderful weekend. We'll see you on Monday, same time, same place. That's going to do it for our cross-platform coverage day. We'll be back again on Monday on Bloomberg Radio, Bloomberg Television, and on YouTube. Have a great weekend.